I think that we all underestimate our ability to be good investors, okay? Now, there are times that you need the help of an investment professional. I got to thinking about this because I really have a tendency to beat up the brokerage business pretty bad, okay? But I got to thinking, well, you know what? There are times when you're going to need their help. I think I got the thing that jumped right out to me was retirement planning, setting up IRAs, Roth IRAs, other types of accounts like that. It's good to have somebody help you kind of set that out. But again, you've got to make the ultimate decision about how you invest, okay? One of my other investment heroes is a guy named John Bogle. He was the guy that is the father of index investing. He was the guy that first created the concept of an index mutual fund that simply tracks the performance of the market. It's not designed to outperform the market because it's just going to be a mirror. It's going to be a clone of what the index, the S&P 500 or whatever does. And so everybody thought he was a crazy man when he did this. But it's proven to be successful. Index funds outperform 80% of all managed mutual funds out there. But Bogle has said over the years, there are two things that sabotage your return as an investor, and neither of them have anything to do with stock market volatility. The two things that sabotage your investments are taxes and fees, okay? You've got to find a way to control those two things. There are ways to control taxes, but you have absolute power over the fees that you pay on your investments. You can go out and buy stocks directly. I hadn't planned on talking about that today, but there are ways to buy stocks and completely cut the middleman out of the equation. You can buy no-load mutual funds that don't have any sales charge associated with it. They may have annual fees, and that's something you've got to check out. But these are all ways to do this, and you don't have to constantly be turning over your account. Buy good investments and hold on to them. That's worked rather well for Warren Buffett. Buffett was asked and is always asked, Mr. Buffett, you got all this stock, you own all these great companies like that. When do you decide? When are you going to sell? And he said, never. Put the effort into finding good companies to invest with and just enjoy the results of that. Put some sweat equity into it and go ahead and work on it. So find ways to do this. And again, if you need to make a decision before you ever sit down with any kind of an advisor and determine what you want your money to do. Because if you walk in and say, I just inherited $1 million, what should I do with that? They're going to put you into their highest fee generating products that they have. It's human nature. I'm sorry. It is what it is, okay? And so you've got to have a plan as to what you want your money to do. You've got to know what your tolerance for risk is, and a number of other factors that come into play on that. I spend a lot of time on this when I work with seniors because it's really dangerous. It's really, really dangerous. One of the things I do every day is go to the web, the pages of the Securities and Exchange Commission, just to read the scams and frauds that they're trying to bust. And there's so many of them. I mean, every day there's 10, 20 new actions the Securities and Exchange Commission has taken to try to bust up these things really that are fraud to begin with. But again, you've got to decide what's right for you. You've got to work to keep your fees and taxes down. And you usually can do that on your own. You can do that on your own. Investing, folks, is incredibly simple. By the way, why would you invest? Well, I mean, let's assume you could get 6% on a time certificate. Why would you invest? What's the real benefit of investing? Compounding's good. Making money's good. But you really invest, in my mind, with one idea and one idea only, and that's to make your money grow at a rate faster than the rate of inflation. Okay? If inflation is running at 8% and you're earning 6% on an account, after taxes, you're probably 4%, and then inflation steps in, you're in many cases losing money. A lot of you in this room, not all of you, but a lot of you remember back in the late 70s and early 1980s when you could get 18, 19, 20% on a CD. Okay? And man, everybody thought that was great. Well, the problem was the maximum tax rate back then was 72%. inflation was running at 15, 16%, and you were actually, the buying power of your dollar was going down every year, even earning those kinds of returns on your money. So you've got to find a way to make your money grow faster than the rate of inflation. And if I've got a stock, a company that's raising their dividend 10, 12% a year, that's beating the socks off inflation right there.